Hey everyone, it's Sunday. Thank you for coming. Sadly, my voice is a bit shot, but we have a lot of stuff to get through, and this will be a big show. It will also include a lot of very shocking information, so be prepared. Warning in advance if you're not into being shocked, probably time to walk away. Anyway, this one's called Doom or Bitcoin's Gloom or Boom. This, anyway. We're going to talk about a whole bunch of stuff today, and none of it is financial advice, but we'll be talking about Bitcoin versus MicroStrategy. We'll be talking about AI energy plays. We'll be talking about the future of UBI and AI. Is it as bad as people think? We'll talk about how to get exposure to key AI names. We'll look at, a ton of predictions, some very scary ones too. And all the questions come from Patreon. A big thank you to everybody out there. We look forward to these every single week. And I actually learn a lot preparing this, and I've been working on this since yesterday. So let's go. First question. Hey, James, love your videos. They are super clear and always help me make sense of Bitcoin. I'm freaking out a bit after hearing Henrik Zeberg say Bitcoin could crash below 30K after hitting 120K. He's talking about Bitcoin moving with risky stuff like NASDAQ, a huge US recession coming, worse than 1929, no more liquidity after a big peak, Bitcoin's past 75% drops, weird signals in treasury yields, 2-year, 10-year uninverting. I'm super bullish. You want to keep my 3 Bitcoin, but I'm honestly thinking of selling 2 with your 160K plus target for 2025 and all the ETF and whale action. What do you think of Zeberg's crash idea? Could it really tank that bad? First of all, my Bitcoin prediction was $119,000, and I made that in 2023 for 2025. So we've already checked that box. But let's get into a bunch of the data. First of all, you're not the first person to ask this. Neil 3, you asked it twice. I saw both. Anyway, let's get into this guy. His name is Henrik Zeberg. And he is what they call a perma-bear. In 2020, he had an astrological double zigzag pattern, wave C. As you know, I've completely debunked Wyckoff. I actually made COVID infection rate map to a Wyckoff chart once, way back in the day. So I'm not one giving into that. But back in 2020, he predicted $1,750 Bitcoin. Okay. And that would be for a long-term bottom and driven by a deflationary bust. Interesting. And he has a report to scare the hell out of everybody. Also, he talks both ways. He says, we're going to go to the moon and we're going to go all the way to the bottom basement dwelling, as you can imagine, all over the place, all over the shop. Likes to use blow-off tops and absolutely deathly bear markets that last forever. And his latest one is a target 4K. It's an inverse chart, but now he predicts we go down to $4,000 in 2027. Yeah, if you are not aware of what's going on and you saw that, you'd be pretty terrified. And he quotes Peter Schitt. Peter says, tokenized gold will eat Bitcoin's lunch. I mean, the cope on this guy is unbelievable. I shouldn't be even giving him oxygen, but Henrik Zeberg loves him. So when you see these two aligned, all your questions are answered. And I call him the Alarmist Chartist. Zeberg, he has a history of premature bearish calls. Again, 1750 and 2020. He always expects a bad recession and a job apocalypse from AI. We'll talk more about that. He might be half right on that one. And he is an alarmist with 45 wrong depression predictions. There's a lot of people like this. They are called perma-bears for a reason. They have a mental glitch, and they're always pessimistic, and they always expect the world to end. And as Elon Musk says, it's better to be optimistic and wrong than pessimistic and right, which is so true. But when you look at all the data that I'll get to, it's very difficult to be so pessimistic. And I'll get to that in a minute. So thank you for the question. Ignore these psyops. You know, they say sometimes a broken clock is right twice a day, but forget about it. Anyway, I won't give too much oxygen to that. It's been a while since we've seen Surf Sats. Their last post was 7 months ago. Again, sorry about the voice, everybody. It's shot. I don't know what's wrong with it. James, big thanks to you and your team for all the ways you shine light for the high community. Thank you. And I love doing this. Did I say that already? Question. For the many reasons you point out daily, I believe we are in a different and more mature Bitcoin and digital asset era compared to previous cycles. That is for sure. Are there any ways the current hype and enthusiasm and up-only statements we are witnessing remind you of the fall of 2021? Please explain things that keep your head out of the window and for how. So when Surfsat says head out the window, that's my view of always look at the macro, look at what's going on in the world, the greater picture. It's critical when you're investing. First of all, I'm going to turn off my little camera, but this is kind of my bull thesis, which is based very much on money flows and supply and demand. So BlackRock has bought 750,000 Bitcoin in 18 months, give or take a month. Sailor has bought 420,000 Bitcoin in 18 months. Okay, these two alone have purchased 5x the supply. 5x the supply. Okay, that means we're going over 2 cycles. Okay, and the next cycle, it'll be half the supply. So this asset is getting harder by the day, and more treasuries are coming. And the more money printing is coming too. And rate cuts are coming as well. By the way, I saw a stat just last night that there's nearly 80% chance or more of a double rate cut in September. That's 50 basis points. When that happens, things will kick off. And again, I'll reiterate my target back in 2023 for this bull run was 119K. So we got there. The question is, can we go further? We'll look at that too. But behind the scenes, just analyzing wallets, this is one of the many wallets that I look at and observe. They've bought 4,000 Bitcoin in 15 days, okay? And this is what I call Mrs. 200. There was a lot of talk about Mr. 100 for a long time. But this is Mrs. 200. And they used to buy 200 at a clip. Now Mrs. 200 is buying 500, 680, 800, 400, 500, 356, 570, 236, 300. Like pretty much every single day. And this is since the beginning of August. Again, 4,000 Bitcoin. And they're building a big bag. I don't know who this is. Is it a nation state? I don't know. It's not a Sailor wallet. That's for sure. It's not an ETF wallet. It's something different. Now, the other thing that's kind of interesting, and this from Martoon, great posts by this guy. And I had the same spidey sense too, but he normally doesn't buy on a Monday. But this week, we had a big spike. We went from 116K to 124K in hours, everybody, hours. And Martoon believes, and honestly, I wouldn't be surprised if Sailor was behind it. We know Sailor has bought. He gave us the bat signal this morning. So Sailor has bought Bitcoin. How much? I don't know. How much stretch can he issue? I don't know. Is there infinite demand for stretch? We'll talk about that as well in a minute. If so, there could be a lot that could be bought this week. We'll find out tomorrow morning, and I'll post about it in Patreon the minute it comes out. Now, the other macro tailwinds, again, I'll mention money printing is coming. People saying, oh, money printing, it doesn't float all boats. Hell yeah, it does. Absolutely does. 80% correlation. And rate cuts are coming. That last time rate cuts came, a 25 basis point cut came, Bitcoin went up 40%. And then a 25 basis point came after that, Bitcoin went up 45%. That combined move is 100%. Not saying we're going to get that again, but that's what happens when rates get cut. People go risk on, money gets deployed. Okay. So where do we go from here? I'm not sure, but either way, it's a different cycle. It's a very, very different cycle. So let me try to sum up where we are comparing the cycles. So this time around, it is a bona fide asset class. We have ETFs, we have treasury adoption, etc. And the billions coming in are insane. Billions and billions. You know, 2021 was all retail driven and it was manipulated by bad actors. So you can scratch that. Think more like 2017, except it's a real asset class and tons of money is coming in and the asset's much harder. Also, the inflation and market conditions are different. 2021, we saw the CPI spike late in the year, and 2022, aggressive Fed rates hiking, and that destroyed the Bitcoin price action. Remember, interest rates cut both ways. When they raise the rates, it hammers risk assets. When they cut the rates, it inflates risk assets. So the question is, what's coming next? We know rate cuts are coming. So it's different from that perspective too. In addition, the other big difference is Bitcoin is a lot less volatile than previous cycles. It's shockingly less volatile, amazingly so. And on-chain, we see a decrease in short-term holder supply that I watch very carefully. And it looks like the short-term holders are pretty exhausted. They're done selling, and so are the long-term holders too. And this cycle resembles 2013 and 2017. So if you want to look at charts to compare, ignore 2021. That's just my 2 cents from a guy on the internet. Thank you for the great question. I like the way you think. Now, the most important thing, though, is what I call the top and bottom indicator. This is my ejector seat where I hedge. I don't have, I don't know how we'll talk about that. You don't talk about that. But basically, what's interesting about this particular chart now is I have the top and bottom indicator. That's the colorful chart. Blue is the Bitcoin price action. And I also have the 200-day moving average. And if we go back to 2017, 2018, you can see when Bitcoin spiked, when it went red, the price action was 4 to 5 times the 200-day moving average. And then in 2021, it was over 3 times the moving average, the 200-day moving average. And now we are just 18% above the 200-day moving average, which tells me we are not overheated. And the TABI model also says we are just orange, which is kind of like a little bit more than middle of the road, level 4. We still have to hit level 5 and level 6, which is dark orange and red. We are nowhere near that. So things are very hunky-dory, calm, and we're just trucking along. But there is a little bit of maybe, I don't know if this is good news or bad news, but it did have me concerned last night. They meet the new head of the WEF, the interim head, who actually has, he is the biggest money runner in the world, and the IBIT Bitcoin ETF has 750,000 Bitcoin. So I know in the past, I am not a fan of the WEF. I believe in freedom, and I believe in small things. But this is, WEF historically is a billionaire only club. They have plans around vaccine passports and digital IDs and central bank digital currencies. The old slogan, you'll own nothing and be happy. By the way, we'll talk more about that and AI and what could happen in the future. It is pretty scary. When you put all the pieces together, it's not hard to forecast where we're actually going. A Danish WEF member said, we should all share cars, maybe share underpants too. Fantastic. Then there's a lot of talk about the Great Reset and leveraging things like C-19 disasters as an extreme opportunity to push extreme changes. That's freaking terrifying. And again, maybe I'm being unnecessarily paranoid. Maybe Larry wants to change the WEF to being a better organization. But I do know they have their claws deep in a lot of the leadership, places like Canada, place like Denmark, place like UK, and other places. So I'm hoping, I was thinking, is this a mistake? Is this really happening? Anyway, I hope I'm wrong, just being paranoid. But always be paranoid and always be learning. Let's get into the next question from Mr. Burns. Thank you, buddy. Can you help us understand MicroStrategy's recent price action? Year to date, we're doing great if we zoom out. But without ATMs below a 2.5 MNav, we're not seeing consistent movement with Bitcoin, and I'm curious as to why. My assumption was MicroStrategy would run with Bitcoin, driven by institutions and individuals who cannot get Bitcoin exposure otherwise. Do you see alpha chasing with other treasuries, rotations into ETH and ALTs given the recent runs, or does MicroStrategy not perform when range-bound versus breakouts because of less available capital via STRC, etc.? Thank you for all you do. Happy Sunday, Mike. I see you there. So this is so much to this question. First of all, one of the things I will touch on is STRC in a subsequent question. The other thing is Michael Saylor did buy, but he's using preferred to buy unless you get above 2.5 MNav. So the Satoshi per share accretion might be less, but we're not sure. We'll find out tomorrow morning as some type of indicator. But let's look at a couple of things. First of all, the MNav over time. We're at the low end of the range, under 1.5. All these little dots here are how recent they are. Red is recent. The old stuff is old. And you can see when we actually began, there wasn't a lot of MNav was quite low, and especially in the bear market, it was very low. It actually fell below 1 for a while, which is a great time to buy, by the way. But most of the time we are higher, but we're at the low end of the range. Not sure why. Next, this is a simple view in which MNav could blow up. One, infinite demand for STRC, which is their new money market fund, which gives people very good short-term returns on their assets. This will blow up the NavPrem if they can sell billions of this product. And it means Sailor can ATM, doesn't have to ATM the ordinary, which is great. Unless, of course, it drives Bitcoin to the moon, which drives the stock up, etc. And this could drive a Bitcoin supply crunch. And this could drive a lot of FOMO. We saw the top Norwegian pension fund doubling their MicroStrategy position in Q2. So that's exactly what you're talking about here, Mr. Burns. Sometimes people do not have access to spot Bitcoin, or they can't buy it in their pension fund, but they can buy MicroStrategy. This is the more detailed version of this, because I think about this all the time. I call this the virtuous cycle of Bitcoin. Again, imagine infinite demand for STRC or their other preferreds. This could unlock $100 billion to buy Bitcoin. And this will blow up the NAV premium, and again, on and on without common dilution. And it would restore the Sailor premium via FOMO in institutional flows, because people will at last get the premium, the sats per share accretion. And then he can ATM the ordinary, which would then in turn raise the 2.5 NAV premium even higher. And then he can drive Bitcoin to the moon, because he can make, convert fiat into Bitcoin at an accelerated pace. But capital from the STRC and ATM buys Bitcoin, tightens the supply. And going back to the Martoon piece here, this is kind of where this all, hang on a second. I got slide 14, I think. I want to go back to this. If this is the case, and Sailor did make a big buy earlier this week, this could mean that the OTC desks are bare. They're not. I checked them. They're down about 15,000 from the last week. But maybe all the stuff on OTC desks is not exactly for sale, or not for sale to MicroStrategy. I'm not sure. If he went to market to buy, maybe that's what caused the spike. Either way, we'll find out in time exactly what's going on. But back to this, the virtuous cycle. Again, this could drive us to that 150 to 170K, and it could also increase the NAV premium. So I don't know where we're going to go, Mr. Burns. It's all up in the air, but we just have to wait and see. And either way, it's been incredible. We'll talk more about MicroStrategy versus Bitcoin in another question. But before we do that, we'll go to Value Bull. He said, James, what are the potential impacts of Solana's future adoption and valuation from the following risks posed by Circle launching ARC, Strike developing Tempo, Coinbase-based scaling as a competitor, and Robinhood offering their own tokenized assets on chain? Increased competition leading to fragmented liquidity, developer attention, and user bases. Potential reduction in USDC activity on Solana if Circle shifts emphasis to ARC stablecoin native features. Stripe siphoning merchant and payment adoption to its vast network, deprioritization of Solana integrations, indirect pressure from Base and DeFi and onboarding, etc., etc. So this is good until we started getting to the latter part of that. Then it started being a nonsense question. So I'll ignore that for now. But let's get into where we are. First of all, big picture, crypto is not moving to Wall Street. Wall Street is moving to crypto. Okay, like if you look at Bullish, the Bullish team, that was the IPO this week. They are integrating their core infrastructure to Solana native stablecoins to power custody, payments, trading, and settlement. And remember, if it was easy to build a layer one, everybody would do it. Okay, it is not easy. Look at all the layer ones that have no adoption, no scale, no security, etc. Ton of them. Next, USDC is not stopping. Apparently, per Coinbase, USDC adoption on Solana is about to accelerate. This is from Coinbase that have Base. Why are they doing it in Solana and not Base? They've partnered with Squads Protocol to make USDC the default stablecoin across their entire product suite. And this is also very interesting for Mert, friend of the channel. The fact that Circle and Stripe are building EVM L1s is extremely bullish for Solana. The dominant smart contract language for EVM is Solidity. And guess what the file extension is for Solidity files? That's right, it's Sol. Okay, Sol has the fingers in everything right now, and trillions, as Mert says. And it gets really interesting here as well. Another quick view of the world, and I go back to evolution of everything. You know, traits that improve survival odds are speed, efficiency, and low cost. And they are selected for again and again and again. The best, the fastest, and cheapest always wins in nature, okay? Crypto is no different. Yes, Bitcoin is a store of value, and its slowness is a feature, not a bug, okay? It's also super scarce. But you can see Dave Hoffman from Ethereum is the most secure monetary system in the world. And Totally says Solana is the fastest monetary system in the world. And there's lots of debates as to what's more secure. And of course, I won't get into that right now because I don't want to offend anybody. But you can look around and ask an AI solution what's more secure. The answer may surprise you. Anyhow, that's the evolution of the world, which is so important. But there's more about this. Solana Mainnet just hits new all-time high in transactions per second. Shout out to Marty. See him tomorrow on the channel for DCA. But Solana just hit a new all-time high with the max recorded TPS of 107,664 in a single block on Mainnet. Yes, they've gotten up to 800,000 in test nets, but Mainnet live is now 108,000 TPS. Compare that to 15 TPS on Ethereum. All right, this chain is getting better and faster, and finality is now going to 100 milliseconds, and it's on the cusp of doing more than all of NASDAQ. So, yeah, all these different chains, little EVM chains, they just eat away at Ethereum over time, just like Base does, and that's it. But when it comes to the end winner takes most, again, in nature, I look at a lot at nature and understand how nature works, because that helps me understand how everything else works in the world. So spend time, figure out how the world works, and that'll help you get the answers for the future. So I hope that helps. Next question. Now, this one is a bit dark, so everybody buckle in here. From Saab 14. AI is great for investors, Tesla, Nvidia, etc., but on the whole, probably bad for society. Wealth concentration, rich and powerful controlling narrative, and info dissemination. Pondering AI's future with Optimus humanoids coming. Here are my questions. Do you think AI humanoids will create net jobs? Or, number two, if serious displacement requires UBI, how can it be implemented without socialism, communism? Interesting. I just heard as well that George Soros is funding Mandani in New York, and that's a socialist Marxist. So Soros likes Marxism and socialism, and there is a big play for that whole thing. And this all ties into the very beginning of the WF: own nothing and be happy, have full control, give it over to the government, etc. I'm not wearing a tinfoil hat here. I'm just pointing out all the stuff that points to the same directions. The billionaires want this, okay? I did warn you this was spicy, but I will always share unvarnished truths, the way I see the world. So buckle in, get ready. First of all, this is kind of might be a bit shocking to many. A lot of people believe, oh, AI is going to be great. It's going to help create more developer jobs and stuff. It's like, I don't see that happening. So if we look at some of these data points here, AI job displacement for net UA, like a whole bunch of different players say AI will displace 92 million to 300 million jobs by 2030, outpacing the 170 million new jobs created in the AI sectors. Yes, AI does create jobs. Electricians, plumbers, builders, data center, all that stuff requires a lot of people. But at the same time, it does replace different groups. So if you imagine somewhere in between, yeah, it creates 170 million jobs, but loses 300 million. That's a net loss of 130 million jobs. Not good. But then if you look at some other stuff, Goldman Sachs believe 300 million jobs will be automated globally. McKinsey said 30% US exposure, 60 to 80% in public sector tasks are automatable. think finance, think human resources, etc. WEF, 92 million will be displaced, okay, but maybe higher, okay. And the other problem is entry-level, white-collar jobs are being lost. Nobody's hiring for them anymore because existing staff can use AI to do typically what entry-level people are doing. And we're seeing terrible data. I saw some terrible data yesterday of how people under 24 are not finding jobs. These are the entry-level roles. They are not finding jobs. Whether they went to college or not, they are not finding jobs. So this is very real. And that brings us all to what happens next. Hybrid capitalism via AI, profit funded. You know, for example, tax on the amount of product that a robot creates and give that to the UBI nation as handouts. With that full socialism, we'll see. And we've seen this as well in different parts of the world. Like you mentioned, Norway, Alaska. In Norway, makes a lot of money on oil, despite the fact the country is all electric cars. But then they give back to their people. Alaska, same thing. Different types of handouts without actually being handouts. Everybody gets an equal piece. But this is some of the shocking stuff from the New York Times. Goodbye, $165,000 tech jobs. Student coders seek work at Chipotle. As companies like Amazon and Microsoft lay off workers and embrace AI coding tools, computer science graduates say they're struggling to land tech jobs. This is a fact, okay? Some people believe, oh, AI is great. It means these companies will hire even more developers. No, they're going to do the same work with an eighth of the developers, okay? That's the difference. Bottom line, and again, my take, this is not just another tech wave like the internet or something else. The speed of development and the scope of impact is uniquely dangerous for inequality. And what I mean by that is the battle, and again, I warned you, this is not for jobs or no jobs, but this is who captures the value. So wealth disparities will explode, all right? It won't be the haves and the have-nots. It'll be those that have the AI and those that are left on the side of the sidewalk, footpath, whatever you call it, okay? This is shocking. And there will be a UBI or AI dividend, you know, charging the product of AI. It's going to be hard to do. But this is why I also make videos every day. This is so, so important. Everybody, massive changes coming to us in the world. And this is another little tidbit that fits into this story. 80% of NVIDIA employees are millionaires. Okay. And I think it's like half are worth over $25 million. These statistics are crazy. This is the wealth that AI creates fast. We're talking in a couple of years. 80% are millionaires, and many of them skew real high, worth more than 25 million. When somebody has more than 25 million, odds are they stop working and they become this, okay? They become this, not jobs or no jobs, but who captures the value. The NVIDIA employees capture the AI value, all right? Not the employees with the white collars using AI to do their job. I hope people get that. And the other crazy thing is as well, we are still early, very, very early. So that's the first piece. The future, what does it look like? Worst case, I did warn you, seatbelts. Neo-feudalism. A tiny AI capital class owns all the assets and all the wealth. The key employees at these companies, for example, Tesla, NVIDIA shareholders, they become the wealthiest people on the planet. Okay, best case. Okay, the optimistic case, we get this hybrid capitalism, AI dividends, profit sharing, broad ownership, enabling post-scarcity society. Maybe in Europe they'll take over whatever, or find the hell out of Google and Tesla, and I don't know. But I'm already seeing signs of the UBI nation, and humans will vote in to office who pays them the most benefits. That's what I call the UBI nation. We're already seeing that happen in places like Minnesota in the United States and New York, and across other parts of the world too. This is the best case. But again, if everybody lives on handouts, especially men, and they have nothing to live for, it's not good for them, their mental health or their egos. So either way, I don't see a good outcome. I'm leaning more towards the worst case here, and I wish I had better news. But the point is, that's why again I make videos. Get exposure to AI, get exposure to crypto. That's your life raft to secure your future. So thank you for that question. I'm glad that one is over. That was a terrifying one, but that's my view. We'll see if I'm right. Come back in 2030. We'll see how bad things are, and I think they're going to be pretty bad. Hello, James. My better half and I have been following you for about 3 years, but Lord knows we certainly wish we had found you sooner. Many thanks to you and the I team for your devotion and patience and all you do for us. Oh, thank you for that. Given your recent forays into IPOs, I thought this topic question would be quite relevant and of interest to the IA community. You've given your take on the new Mag 7 Plus. I call it the Mag 9 a couple of times so far. In each case, access to a potential IPO or two was involved, and one of them being Anduril. Correct. Could you please identify the current Anduril investment avenues you are aware of, and that would be available to non-institutional, qualified investors, non-qualified investors, etc.? And what do you think the odds are that Palantir and Anduril become one? Interesting. I don't think that's going to happen, by the way. They don't need Palantir. That's the other thing. In the past, for AI, you'd have to acquire different companies for advantages, but no, I don't see that happening. And yeah, Anduril make autonomous systems, weapon systems, counter drone technology, etc., for U.S. and allied forces. And the world has changed. The days of having aircraft carriers and stuff are gone. Tanks gone. This is all going to be drone and AI based, just like everything in the world. Everything is impacted. Now, there's a couple of ways to buy Andurils. You got things called secondary markets. I've used Hive myself, Forge Global, EquityZen, NASDAQ Private Market, CartaX, Upmarket. These are places where you can buy shares. But remember, the liquidity is often bad and the rates are high. You need to find somebody who needs some liquidity. If you have an employee, say at Anduril, wants to buy a house or something, yeah, they'll put some shares online. And the process also takes a bit of time. Don't expect like buying a stock online. It's going to be instantaneous. And also you'll be paying a lot of premium. That I mentioned liquidity is bad and pricing depends on supply and demand. Okay. And Anduril valuation is in the billions right now. I think it's 28 billion or more. So it's not even cheap anymore. The other thing is venture capital and private equity exposure, access, being an accredited investor or a limited partner in these funds. You've got Founders Fund, Andreessen Horowitz, Valor Equity Partners. They all have exposure to Anduril. And if you have ultra high net worth, you can find somebody who can get you exposure as well. Then there's the kind of pre-IPO case and thesis is also possible. You could also use public market proxies, Lockheed Martin, Northrop Grumman, etc. They partner sometimes with Anduril. If the U.S. government wants Anduril to do something but work with Northrop Grumman, maybe there's a partnership there. Palantir is a close type of proxy as well, but I think the odds of a merger between Palantir and Anduril are less than 20%. And then there's other companies like Joby Aviation, Archer Aviation. Archer, I think, does eVTOLs and stuff like that, but I think we're still too early for eVTOLs because the energy density is not good enough for these types of vehicles yet. We'll see. And then the IPO watch. Sometimes just wait till 2026, wait for it to come out. So there's a lot there. There's lots of different ways of getting exposure depending on who you are. But this is the actual stock price, Anduril. You can see it's going up. The current price of the stock is, should I zoom in to read it? $61.34. But again, it can change. And it took a big jump up as well since November last year. The bottom line, accredited investors' best shot is pre-IPO exposure like Forge or Upmarket or Hive. High risk, high reward, low liquidity. For me, it's not really something for me because I don't like to buy low liquidity equities. I'd rather wait for the IPO and then play options on the IPO. if that's possible. There's also tokenized versions that speculate on price, but they're also very risky. And if you're non-accredited retail, wait for the IPO or gain a proxy with ETFs that may have it as well. So I hope that helps. Next question. Interesting one, because I had a conversation a week ago with a plumber about this. This is the first time 2140 Project has posted. Do you ever short companies that are a relic of the past and destined to fail? Let me tackle that first, because there's a lot of companies that are zombies. I know they're zombies. Certain banks, you have Ford, General Motors, but they're not quite ready yet. And even though they're zombies, they take a long time to die. And companies like General Motors do stock buybacks, so you can't really short them because they're borrowing money to buy back their stock. That's a Ponzi almost. But other companies like Yelp, how are they still in business having strong sales when their original service of business reviews has pretty much been taken over by Google reviews? From my experience with them as a business owner, they seem to rely on extremely aggressive sales tactics, and probably the fact that they are still integrated with Apple Maps helps them stay afloat. But I would imagine that's destined to end at some point. By the way, have you ever used Apple Maps? It's horrific. I didn't even know people use that. It's stunningly bad. Anyhow, their stock, like their Siri, their stock price has been in the 30 to 40 range for the last few years. It doesn't seem to go anywhere. Have you ever analyzed this company, and how do you see their future? And when you analyze a stock to short, what are some of the things you look at? So, interesting one. I've never analyzed this company before, but let's look at Yelp on the ATR. ATR is my go-to for identifying where the stock has come from. Is it a zombie? Where are the levels of support and resistance? And you can see very clearly from this chart a couple of things. One, it's chopped sideways since 2015. 11 years of dead money. And that's not even divided by M2. If you divide this by M2, you're taking it in the shorts. Second of all, it bounces between level 1 and level 2, like clockwork. And we're heading down towards level 1 again right now. The chart is bearish. I would not buy here. This chart is so bad that the ATR, it just doesn't like it at all. Next, Yelp. This is the interesting thing. This is like a Yelp moment. They're growing, okay? And the financials are not bad. They got lots of cash, very little debt. They've been paying down their debt. Revenue's growing, and they're making good profit. So when I see that, it's like, no, I'm not jumping in front of that train. And they keep beating on earnings. Wow, very impressive. So the quick result is, yeah, it may be a poopy company. By the way, I had a plumber at my place here, and he absolutely, it's as if you were him who posed this question. He said he hates Yelp. When they get a bad review, they got to pay Yelp to remove it. And the sales guys called him saying, you got to move this. It'll pay me $500 to get it off. It's shocking. And he hates them. And he tried to get on Google, but the zip code where he is in the Bay Area is not a good zip code. And that's where his office is. And Google tie it to his actual office place, which is actually a good thing. But he only works in a certain neighborhood, but doesn't work where his office is. It's a very interesting story. So he asked me, could he get around that and get a Google review? Anyway, long story short. But the point is, people hate them, okay? But their financials are good and they're growing. So I would not short them here. So, and I do believe over time they will be disrupted. When the time comes, okay, I believe 60% of the S&P 500 will be going out of business in the next 5 years because of AI. We'll find the best shorts. We'll be ready for that. I hope that helps. Next question from Sir Larry. Great question, this one. Hi, James. I've been here since early 2021. I know when I started buying MicroStrategy because of you. I know. I remember every person, every name, every image in this small little brain of mine. I know you've heard this countless times, but thanks for everything. You were a true titan of the financial world. I wouldn't say that, but I do things a little bit different, which work out, you know. But others have said to get to 1 Bitcoin, you took it a step further and have said that 1 Bitcoin for each child you have. Yes, that's very important. So that's what I used to recommend to people back in 2017. You got 2 kids, get 2 Bitcoin. Back then it was like $3,000 a pop. Anyhow, so from the Q&A last week, you said 1 Bitcoin was equivalent to about 500 shares. So assuming you have 2 children, you own 1 Bitcoin and 524 shares of MicroStrategy, and you give the 1 Bitcoin to child A, and 524 shares of MicroStrategy Child B, say in 10 years, who would be better off? I love these questions. I like clever questions. This is a clever question. And this is the calculus I've been doing in my head since 2020. All right. That's why I went into MicroStrategy hard with options leaps in the bottom of the bear. And it was a scary time, but I like to run into burning buildings. Let's break this down. First of all, correction, it's not 524 shares. It's exactly 450.5 shares as we speak today. Remember, MicroStrategy fell down to 366. Everything is a moving target. And this is based on the Bitcoin price of about $118,000. NAV premium, 1.39. So it's like 1.4. And it depends on how you calculate it. This model calculates it a little different to the NAV premium you see in other models and our ARB cloud as well. It's all up to you. But just say 450 shares for the sake of argument. The cost of one Bitcoin is $165,000 today. Okay. Now, there's a couple of assumptions here I want us to think about. First of all, if Bitcoin, I believe, could reach $1 million by 2030, definitely by 2035, if it still exists. The world may not exist in 2030. Remember that, everybody. Always keep your tap dancing shoes on. I always stress that. Never assume anything will be around in a year or 5 years or 10 years, okay? The further out you go in the timeline, the more risky it is. Now, if we do go to $1 million by 2035, that's 10x. So one Bitcoin has, worth $1 million, which is great. However, if there is a Bitcoin bear market for the next 10 years, that will hammer MicroStrategy bad. However, if Bitcoin price continues to go up over time and MicroStrategy continues its strategy of stacking, raising 8 to 10 billion annually, to do a lot more than that via debt, equity, preferreds, and if they get to 1.5 to 2 MNav, and we have no major black swans, and MicroStrategy doesn't go bankrupt. By the way, MicroStrategy has no problem servicing its debt, even if the price of Bitcoin falls to 20K, like the Zeberg guy thinks it's going to 4K. They're still well covered. And if they do need to service the debt, they can just issue more shares. So don't worry about that stuff. But basically, this is the calculus. Bull case. Child B wins owning MicroStrategy. The bear, neutral case, child A wins holding Bitcoin. So if Bitcoin price stays flat for the next 10 years, MicroStrategy gets hammered. You're better off holding just Bitcoin. Now, my expected outcome is child B has higher expected reward, making 15 to 20% annualized. This is where it's very important. If you're making 15 to 20% more annualized, the power of compounding makes child B a lot richer than child A. All right? Let me give you an example of what I mean. MicroStrategy Bitcoin. I've been in MicroStrategy since September 2020. My third video ever was about options trade on MicroStrategy, which I did, and I still held, and I did a lot more of them since then. But MicroStrategy has done 3 times what Bitcoin has done. This is the pair chart of MicroStrategy divided by Bitcoin. And remember, in that same time frame, since September 2020, MicroStrategy has Bitcoin has gone up 900%. Okay, 900%. So imagine your daughter had $100,000. Now she's got $900,000 in Bitcoin if she invested in 2020. But MicroStrategy has done 3,000%. That's the difference, okay? Why? How is that possible? How has MicroStrategy done this? Because of this. Remember, everybody, share accretion. This is the number of sats per share. It's gone from a tiny amount. It's gone 8.6x since August 2020. That's how this puppy has done 3x what Bitcoin has done, okay? Leverage. They're selling fiat cheap to buy Bitcoin, and they continue to do so. So just in summary again, Sir Larry, daughter B, if Bitcoin continues to go up and MicroStrategy continues to stack, is the answer. Hope you like that. You should basically do half-half with both kids. It's unfair to treat them different. but it's a very interesting question. From SB, thank you for all your hard work. I love your content and all the alpha. I was wondering, since you are so heavily invested in AI and one of the largest constraints on compute is power, are you looking to any AI power plays like SMR, GEV, or OKLO? Care to share some thoughts on this? So I was running out of time to do this, but what I can tell you is a couple of things. I looked at the financials, really kind of scary, but a quick for people who know these companies or not. SMR is a small modular reactor company, and they believe they're positioning themselves with the Department of Energy, etc., to build these small little nuclear plants. And many expect a large increase in demand for these things by 2030. So the future is bright, but can you wait 5 years? GEV is a natural gas provider. You've got companies like Tesla buying gas turbine plants in Europe and other countries and shipping them to the US to turn them on here. And GEV leads gas production for all AI data centers, but they will need 6 billion cubic feet per day by 2030. And that expects a 96%, or the stock has already boomed this year too. But that could also be good. I don't do gas. I don't do nuclear reactors. They take too much time. But OKLO does advanced nuclear tech as well. Huge gainers this year too. Again, Department of Energy pilot, and many people expect it going to $80. So all of these are interesting. But let's look at the chart for a second, because I wanted to see if the chart says, oh, there could be a good opportunity here. First, and I did look at the financials of all of these companies. None of them are pretty. None of them pass my financial test. I won't bore you to death with that. But this is GEV. Oh my goodness. It's on a rampage. It's kind of just keeps going up, new all-time highs all the time. But it is it is flashing a sell signal. I warned you, my voice is dead. So that is rock solid. Would I buy it here? No, I wouldn't. OKLO, same thing. Rampage. Trend is up, but again, flashing a sell signal way above the 200-day moving average. So we're late to this game. And SMR came down hard. And when you look at the financials, you'll understand why. Doesn't make sense. Can you wait 5 years? No, you can't. There's other opportunities you can milk for the next year or so, and then maybe rotate into this when it mean reverts and when they start having a line of sight to revenue and profits. So would I touch any of these? No. Was it a good trade back in, say, November 2024, early 2025? The answer is yes. But they've all ran. And as I say, don't chase, replace. Very important. So that was the story. That's 55 slides. And this week we're helping, we donated to Fly Away Bird Rescue to help injured birds rehabilitate. Birds are tough as hell, but when they are injured, they need a lot of help so they can get back on their feet or get back on their wings, excuse the pun. And this group does amazing work for them as well. Sometimes you got to drive as well for bird rescue place. You got to drive 100 miles away, but they need money and we help them. And tomorrow, DCA live tomorrow morning, the usual time with the gang. So thank you. And we have a new special guest tomorrow as well. For the first time ever, we have a female joining us. The thumbnail is not ready just yet, but the first ever female will be on DCA. And those in the Patreon community know her. You'll hear more about that later today when I make a post. So thank you all for being here. I hope you liked the show. I'm going to do some live questions right now. And this was called Doom or Gloom. I know the questions will be coming in a second. Sometimes there's a bit of a delay before they pop in. Let me see. I'll check my phone. I turn it off because it just pings all the time, but no questions yet. Hello, questions? There they are. There they are. Thank you so much to the team behind me that brings in all the questions. And thank you to the moderators as well in the chat too. From Doc Intern. Your NFA, non-financial advice on holding IBIT leaps, strike price 67, expiration 12/27, spot Bitcoin for about 12 to 15 months. If Bitcoin goes to 300K by December 2026, the profit possibly almost 2x versus holding Bitcoin. So first of all, if you're only getting 2x by holding an option, I would not do that as well. And I think the price of Bybit is exactly around there. So don't buy when you're buying leaps. Make sure they're in the money. But the bigger concern that I would have is, your target 300K. I'd happily eat my shoe if we get to 300K next year, but that may not happen. Okay, may not happen. Do not bank on that. You might be able to bank for 160K and then do the calculus of these options, but I would not buy that if you're only getting a 2x, because if you buy an option that is at the money, you're spending all your money on time, and that time value decays and eats you alive. So I would be very careful there, especially at this level. Don't do it, Doc Intern. And consider hedging or laddering out as we go higher. IZ55, with thinking control position of WEF, how can we position ourselves? Should we create some type of black swan? The WEF has an agenda which threatens most individuals. WEF not to be trusted. I absolutely agree with you. I made a detailed post last night about that. Deeply alarmed and worried. Might be one of the reasons I lost my voice. I was like screaming on no. Anyway, we need to watch this very carefully. I don't think it's going to affect markets. But BlackRock is the biggest money runner on the planet, so they can definitely have some influence. But it makes me a little bit concerned. Sorry. Because I didn't sleep last night, worried about that. Snickers toasted. Good evening, folks. Thank you so much for coming. Long-term holder, you rock. Happy Sunday. Joe Biden's daycare. Larry Fink didn't get appointed to change the WF into something good. I'm very paranoid about this. So am I, buddy. Will this have a negative impact on Bitcoin? It could. That's what I covered actually in the deck. I'm a little bit worried. They have a $750,000 position. Of course, it's owned by pensions and retail investors and everything else, but they technically have their fingers on the pot. And I don't know if funny games could happen. I hope not. I really hope not. But we should always be paranoid, always be looking around the corner, always expect the unexpected. Bold and Bankrupt, big fan of the shows, James. Keep educating the masses to the moon. Hope so. Yeah, and we should always count our blessings. We've had an incredible run. Start taking some off the table. Start rotating. Start profit taking. You never know what's around the corner. So when you make life-changing money, lock it in. And thank you for your super sticker, Yunka, J Weir, Signal 113, QC Corner, Angleblacks, and Silva Master. And thank you to the most amazing mods in the chat. You are incredible. And to Fingless Cave, T&D Tesla, Sean Donnelly, K8, everybody, appreciate you all for coming. Sorry about the voice. I hope you understood me okay. And I'll see you all tomorrow in DCA. Have a good night, everybody.